Good afternoon and welcome to the end of the review for today. And today is Monday, April 1st, 2024. It's also the April Fool's Day. So if someone pull a joke or a prank on you, you know that it is April Fool's Day. But anyway, this week we have a full Friday trading week. Last week we just have 4 trading week. Last week we only have 4 trading day. We didn't have a Friday. Friday is a Good Friday. It's the holidays here in the US, and we don't know how otherwhere else we celebrate, but in the US it's the Good Friday and the market close. That's the reason why the market moved very different on the last Thursday. We can review that. And we are in week 14, the very first week of the second quarter of this year. So we just finished the first quarter of this year, and it's very strong. It's all-time high. Very interesting. Alright, here the first week of April, nothing special in terms of option expiration. Wait for the third week. But we already passed the critical week right here. Is end of month and end of quarter. So April normally not much big of a deal. May also have to wait until June. Which is the second quarter of the year. CBOE release will be 2 weeks from now, April 10. Right, April 10. So, wow, actually next week, can you believe that? We need to review how we trade Next week we will review. Maybe around Monday, Tuesday, we're gonna review the CBOE pattern or price action. Last time we have, I think, in here, which is Mark 12, and the second Tuesday of. Is that right? Second Tuesday? Yeah, second Tuesday of every month. Right here. So we have 10. Last time we have March 12. Fed meeting. We won't see any Fed meeting until the end of this month. So basically every month they have. No, not every month. You don't have it in February. So May, June, July. So 1, 2, 3, 4, 5, 6, 7, 8. We actually have 8 FOMC meeting for a year. So they keep February, they keep August. So February and August, no FOMC meeting. That's right. And now we go to GDP. So last time the GDP data release is March 28. The reason why we incorporate this is the latest economic event we incorporate into our calendar, because we see the phenomenal right at the end of the Wednesday. We saw the phenomenal. It really rallied on the last 45 minutes, which is the day before the GBA data release. So maybe someone know the data with solid, know the market will respond solid. That's why it rallies. So that help us to identify and catch a good trade rate there. All right, I think that's a brief review on the economic calendars and our decision or the markets move based on the economic events, and we trade around that. So that's our trading strategy right there. We are discretionary trading and also based on economic events, so it can be so-called event driven right there, because that's where the market move, right? And when you catch that move, we're not going to trade every day. We're going to day trade, but we're not trade every day, so let's keep that in mind. Alright, let's go to the chart today. So this is a 15-minute chart. It gives us it's 5-minute charts. For some reason we misspoke. So when the market start open today, we already see the huge down move start from 8 o'clock. So basically the Q2 open at 7:30 is putting a bearish order block, and then it's go down from there. But there here the very interesting move right here. So basically in this level right here, the low right here, we see a breakdown low with a feather gap right there, and then we break that up again with a feather gap. So right after that we also have another gap down right there. So we have a gap up and gap down. So basically this is a retest of that, and you see that it also create a gap right here also. You see that? That's the gap. So we have a gap up right here, gap down right here, and also retest. So it kind of intertwine right here, overlap right here, and look at the time. Exactly 55, and then exactly at the 10, which is the next, the next 1 hour candle. You show off and leave the gap right there. You see the pattern, and then it retests the gaps. Basically, create liquidity, and it's imbalance right here. It leaves the imbalance and it's rebalanced, and then it moving down. The same right here, the gap right there, but it's not rebalance right away. So maybe tomorrow it may be like balance this, but actually right here we see the gap up. Oh yeah, yep, we see the gap down right there, but we already have this rebalance right here, so that's reason why it's not gonna systematic rebalance right there. That's right. Let's look at the 1 hour time frame. But basically right here we have a trade right there. You can see right here, we mark right here is a basically we can treat this as an order block, right? Further gap, and this is a retest right there. Gap up, gap down, and just a retest. So it's a balance bright range retest right there. Gap up, gap down, you see that, and at around the key level right here, the breakout level or total supply level, or in other words, there's a point of entry level right there. So basically is gap up, right, on the way down, gap up, gap down, and then it's retest. And we can treat this whole candle is a bearish breaker right here, bearish breaker, and it break that again with a feather gap and retest right there. So basically we have a feather gap right here and retest the feather gap, and also before that we have a gap up. So it's definitely is a balanced break range, which is a very high quality setup. let's see, look at the let's pull out the chart. Yeah, let's pull out the chart we have, and then we can see this sorry, it's not a chart but a screenshot or a favorite graph analysis right here. So basically we see right there, so it's a balance, imbalance, rebalance right away. So we just flip the chart, you will have the up and the down, right, up and the down, and retest, and it go down. So basic right here we need, so the up and the down and then the retest right there. So that's how we flip this chart right there. So the down first, is that right? Down first and then up, and then down and then up. So basically it go with this direction. So then we're going to go down first, and then we're going to go up, and then it's go with this direction. So down first, up, so right here, down first, yeah, balance preference, just down first and then up, and we want that retest and go up here. But in this case we may make a incorrect interpretation right here. So right here it's gonna be a little confusion right here. So we have this level is a down, up, and then it's supposed to go up right here, but a down, it break down. So right here, if you flip this, it's gonna be up first and then the down. Yeah, so it makes sense. If you stop right here, up first and the down, and then it's gonna move into direction of the second further gap down right there, which is, yeah, that's right. Let's look a picture again. So however, here is this so it's break level with the graph, so it's the inverse. Actually, yeah, it's two three candle between them, so if we can count as this level, 2-3 is okay, but if more than 2-3 right there, then you have a inverse feather gap. It's not a balance play range, and the balance play range happen between one or two candle right away. Imbalance rebalance right away between only 2-3 candle, but this is more than two candle, then it could be a second place, which is the second plate right here, which is second high probability right there. So in this case, we mark this at a key level or breakout level. First we sit down and we up, and then it go with the direction the opposite direction of the first one. Now opposite direction with the second one. A little bit confusion here. Opposite. No, it go with the same direction with the favorite graph, the second paragraph. So right here we have gap down and gap up. So yeah, it's supposed to be go this way. So, but if we want a okay, then we count from here. So we have the gap up and then gap down, gap up and gap down, and this one retest. So it's go with the second, yeah, right here. It go with the second direction, which is a gap down, which is going down. If we count from this, don't count from this. So this invalid already. So we count from this. From this, we also see a fellow gap right here, fellow gap right here, and then fellow gap right here. So gap up, gap down, balance, and retest right there. So the direction gonna be go with the direction of the second gap down, right? In this case, go with the second gap up. So that is the bullish scenario. Then a bearish scenario is the opposite, which is in this case. So don't count from here. Here's unbalanced. Count from here. So we have a gap right there. If we want to do balance break range, but if we want to entry with another setup right here, only we can entry right here. But if we want for this retest, then we apply the balance break range. But if not, then we go with this bearish breaker with the fair value gap and the retest right there. So break it down. This breaker, bearish breaker with a fair value gap. It also have another fair value gap right here, two fair value gap down, and it's the retest. So basically we can have right here 45, looking for the 40, 45. That's where we're gonna see a manipulation move before it make a major move, around 45 until 40, 45. That's where we see. As soon as we saw that the 45 great value gap and retest 40 at 55, then we know that the setup is in. So basically right here we have a setup right here. So for this setup we have is a in this case a real breakdown because follow the trend. Real breakout or breakdown for that matter. And in this case is a bearish order block. Bearish order block. Fair value gap retest. So basically we have fair gap right here. When it break down this level, we have fair gap right here and also fair gap when it break down the second time. Break down the first time, breaks out the second time, and do the retest. So basically retest twice. Is that right? Yeah, fair gap right here. Retest one, retest twice. Retest twice. And by the way, let me see, entry time is 0945. Let's see what the reach to hold is. So let got it for now. So if we entry right here, then we're gonna target at this level. Why we target that level? Because we look in a high time frame. So we entry at 9:45. 9:45. So here's our 1 hour time frame right here. 9:45 around here. Yeah, we target is at the PM low, the PM low of Friday, because it's open between those. You see that? So it's open between the range of the Friday. So basically open right in the middle. So after it forms this candle, we know that it's gonna form value gap. So this candle either gonna be rebalanced right away, or it can continue to go down. So there are two scenarios we can trade right there. As soon as we know that it's breakdown, because it's leaving the close of this candle, then we know that it's gonna be a continued breakdown right here. As soon as we see this gap, we go in right away. The gap right here, gap up, gap down, we can go in right away. But if we want to go early, we can go early right here at 45. But if we go late, we can go right here at 55. And our target gonna be the PM section low. If we target the PM section low, our target gonna be here. But if we let it run, it hit exactly on also on the 1 hour time frame at this level. What is that level? Want to see what is that level? So let's see. Which is this level is 1 hour. Yep. But you know what? Let's go with it level. We still have a good run right there. This level is exactly at here. You see the gap down and the gap up. That's the key level. Another gap down right there. Another gap down, and this one, yeah, this one is not a gap up. So this is a very key level. We don't see that level until this one hit candle. But let's say that we failed to recognize that level, then this is a very obvious, a very low hand put target right here, which is at this level. What the high of this candle? 52.87. So 52.87. Even. Alright, now go back to the 5 minute. Yeah, so that's the target we reached right here. And let's see how much we reach. So if we decided we go early in here, and now we know this candle, well, you see that the highest is this candle exactly. And let's say we reach 1. Okay, let's say we entry right here. Let's say our entry at this level, we know that it's gonna retest that level. How deep, we don't know. And then we leave this 53, and now we let this above. This one is 25 cents or 50 cents. What the high of this? The high of this candle is this key candle before it going down. So you see it retest exactly the high of that. So the high of this candle is 53, 17, 25. $17, $25, right? Let's say we want 2 pawn. 2 pawn to equal 75. Yeah, 2 pawn right there, 75. That's beautiful right there. All right. Now let's see. We aim for conservatively. We just aim right here. For sure, it's gonna test. We're gonna test this low, the priority low, but also a high chance that it's gonna test this level, the level that we put right here. All right, let's see on high time frame. The reason why it goes high level because right here is it have imbalance. So for sure it's gonna retest this. For very sure. Yeah, I'd go all the way. It's gonna retest it level. The failure up right here. So that's how the price moving. It moving after a 6 external liquidity range. It go to internal liquidity range, which is this huge gap right there. Now we go back to this setup. Oh, okay. A little bit right here, so we have, so we hit right here. Wow. So we have $3 for the risk. The reward we can have 4, or we can have this one 28. So 4 or 9, 4 to 9 ratio right there. That's huge, man. Look at that. Let's move it out of the way a little bit so we have more space. Alright, let's take this screenshot. Document is, so we can early enter right here, or we can handle at exactly the right here. I think 10, which is the time alignment rate at 10. At 10 right there. So right here we go early entry at 9:45, or we wait for 10. We can go in at 10. We sell. It retests the level exactly. You see that? That level it reached back right there. You see it never closed above the level. Especially the body right here, no candle close above that. So it's really reached back this so-called resistance right here, a bearish breaker right there. So wait for the fair gap create and the retest, boom, going. If we want to go early right here, but if not, we go at 9:45 or 10. We have a huge advantage right there. Yeah, so in this case, it's just a trend follower. When you do a real breakout, then it's a trend follower. But if we do 4 breakout, it's a total soup. So it's a reversal. Again, a trend right there. So we have a 1 to 4 residual ratio, or 1 to 9 residual ratio right there. That's a huge trade. $45 or 10, which means later. Yep. It will go in at 10. It will balance break range. You see the balance break range right here. Yeah, if we're going 445, it's gonna be real breakout, further retest. We can do right here, but if we go in, yeah, just it's also real breakout. All right, but if we go late right here, it's gonna be a balance price range. Retest. This is an entry time gonna be gonna 10 right there. Yep. Let's move it right here. So understand the ratio gonna be 1 to 4 or 1 to 9 right there. Which have, because this level work for both entry. The level right here at 53.15 right there. This is very beautiful. Work for both. So basically we have this right here, or we entry at this candle. Both have ratio or ratio the same because of the same entry level. Right, so let's say this gonna be a real breakout, and it's gonna be a short setup April 24, and it's gonna be a it's gonna be Monday today. It's gonna be Monday. Oh, yep. Yeah, that's a very beautiful short setup right there. And we also have a one good long setup. Alright, after this breakout, the real breakout right there, we see the double bottom right here. And in this case, we also have the balance price range, but in this case, the long. You see, we draw the balance price range right there, further gap down, further gap up. And basically, we're gonna go in right here. We know that it's gonna retest very deep in this case. In this case, the balance price range right there, and it's gonna retest deep. So we put our, let's say, entry at the close of the bullish breaker right here, or this auto block right here. If we go early, but if you go late, we can put a stop loss. The entry at that level is not. But let's say we make good money on this one. We can a little bit aggressive. We go in early. Basically, we're gonna put the stop loss right here, and would entry at the close of that candle. Right. So we reach almost $2, and let's see how much we get. And our target is gonna be this level. All the sell liquidity of this level, but let's go for this level for now. The breakout level, I see the gap down right there. That the signal it gives us right there, gap down and another gap down when it breaks that level. So that's the key level that the price gonna go there and retest or rebalance right there. And we just aim right here with just that level. Yep. So basically we have 1 to 3 risk to reward ratio right there, and it hit right here at 14.35. So basically we wait for an hour right there. So we're going right here and it hit that exactly target right there for us. So let's see, and it's the time alignment is right there around the 30 hour right there, 30 minutes of an hour, 30 minutes after an hour, after hour right there, 2025 right there exactly. We have 4 breakout right there. You see 4 breakout level. That's right. So we enter right here and we have a double bottom set up right there, and I think we do have the swing shot. We take it early in the morning right there. Let me see. Yeah, that's the setup we set. Bottom break range, the retest right there. We check the swing just when it's happening right there. Or maybe 5 minutes, 10 minutes later after it happening. So now let's redo that work. Go back to the chart. So basically we have 2 setup. It's a bottom price range right there. So let's check this. Alright, let's remove this. So we're going at 30.25. And the setup right here is basically a 4 breakout in this case, right? 4 breakout. The other case right here is a re-breakout. It is a 4 breakout. It's a bottom price range retest, bottom price range retest, entry time 13.25. Risk to reward ratio 1 to 4 right there. Yeah, 1 to 4. That's a good risk to reward ratio right there. So basically we enter at this candle. Entry at the open of the candle at 12 right there, and basically a buy stop at candle 12 open. Yep. That's the entry level over right there, or we enter at this level. Second entry level right there, which is 552.86. Yeah, right here we have to say it's a long setup. So we have it. Alright, let's save it. So it's a 4 breakout, and it can be found by retest long setup, and the time is around the end of lunch time right there, 25. Save it. Alright, I think we By the way, before we go in today, we see this phenomenal, I think it's called smart money technique. We saw the version. Basically, we saw the version from the pair ES and NQ, and we know it's gonna be short. That's why we have confidence that a short can happen. You see that the reversion right here. You see the reversion when the NQ make a low high, but the ES make a high, so we know that it's gonna come down. But the come down very hard from the ES because it take rate liquidity, so it's gonna come down hard. Look at the NQ, is not come out hard at all, but you see that both but for the NQ you see it close below this critical level right there, and the ES also close below this level, so it tells us that it starts coming down. You see it's a full breakout. You see this breakout, we have fabric up down, and now have fabric up, and this is just retest. There's a balance break range right there. Oh, I see. Balance break range when you have down, up, and retest. So this supposed to go up according to this model, right? You have a down, you have up, and then it's supposed to go up. So let's see how it behaves. If tomorrow it break out at level, if retest level, and then it go up, then it's a bullish setup right there. Otherwise, it's gonna go down. So it's the 31st trading day of this quarter right there. All right, I think that's it for today. We wrap it up here. Let's take a look at the weekly candle. See what we see. What we see on a weekly. So weekly profile. Yeah, so we see this week. So we can see that this is a last bullish candle. Yeah, that's not even. So it's not even out of this. So okay, so you see the value right there. So it's not even close above the high of this. So both of them close below, even though it's take out the buy side liquidity, but this candle close below that, and the candle starts, go down, downward right there. And now let us see what is the quarter. Well, quarterly. Okay, so we see the last two quarter is very huge. So we would love to see if this go down and retest this breakout level right there. So let's break this one. Maybe, oh, we see it now. So we break this level. So maybe this quarter gonna be consolidated because we want to see the gap created. So we believe, oh, so this after the huge move, two huge move from the last two quarter, we believe this quarter gonna be consolidated. You need to accumulate maybe sell liquidity, and then it go down and it retest the gap. Yep, that's our theory right there. Alright, I think that's it for today. Thank you for this time and interest. We're always grateful for this opportunity. We do what we love, then success comes to our way, no doubt. Thank you and have a great evening. Bye for now.